This is the Self-Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self-Storage Podcast. I'm your host, Scott Meyers, and today's guest, John Bowens, is one of the most sought-after and respected educators in the self-directed IRA industry. John has been investing in real estate for 15 years, and he is currently a senior manager at IRA Custodian Equity Trust Company. He has trained over 50,000 investors nationwide during more than 300 workshops and classes, both live and online, where he spreads the message about the power of building tax-free wealth and leaving a lasting legacy by investing in what you know best. He also contributed to the book Self-Directed IRA, Building Retirement Wealth Through Alternative Investing, with Equity Trust Company founder Richard Desich Sr., whom I have personally known for over 20 years now. And John has appeared on several national real estate and finance-related radio shows and podcasts. So without further ado, I would like to welcome my friend, Mr. John Bowens. Hey, John, welcome to the show.
Hey, Scott. Thanks for having me. Excited to be here.
Well, once again, appreciate your time, and I gave everybody a little background on yourself and on your company, but if you would, why don't you fill in the gaps, tell us a little bit more about yourself, the business, and what you've been up to lately.
Yeah, absolutely, Scott. So I like to say that Equity Trust Company and myself, we're a rather big fish in a very small pond, in a pond that most people are completely unfamiliar with. It's a very remote pond, I'll say. And that is servicing folks that are looking to invest in real estate and other alternative assets with a self-directed IRA, self-directed solo 401k, or other tax advantage investment account. So most folks are not familiar with the concept of being able to invest in non-stock market based assets with a self-directed IRA, self-directed solo 401k, or other retirement account, right? Most people are familiar with putting their money into either a mutual fund, multiple mutual funds, an ETF, or maybe a variety of different stocks for someone that might be a little bit more in tune with making trades on their own. But most people aren't familiar with the ability to be able to flip houses, buy rental properties, lend money secured by real estate. And as we talk specifically about self-storage, the ability to invest across the continuum of self-storage. So for the folks that are passive investors that are looking to invest as a equity partner in a self-storage facility operation, they have the ability to do that with a self-directed IRA or self-directed solo 401k or other tax advantage investment account. So they can diversify beyond traditional stocks, bonds, and mutual funds. And then, of course, on the other side of the continuum, we have people that are on the operator side or syndication side that are looking to identify investors and raise capital from investors that have retirement dollars. And so we offer the conduit, the mechanism by which folks can come together and invest in these types of opportunities. And we refer to ourselves as a self-directed IRA or self-directed retirement account custodian. So we don't necessarily provide advice or investment solutions, but rather we give people the account, the infrastructure, the technology, the individual one-on-one customer support to be able to invest in a wide array of alternative investment opportunities.
Well, and we're thankful for that, because it was 25 years ago that I met Dick Desich, the founder of your company, and turned me on to the wonderful world of self-directed IRAs. And I became a passive investor first, and then, of course, drank the Kool-Aid and told everybody that I knew about other ways, alternative ways to be able to invest in real estate. And then once I became an active investor and getting to the place where you eventually run out of cash. And if you want to grow and scale your business, then you bring on private equity partners, and then introducing them to this vehicle and the ability to do so and direct their investments. That's the ultimate freedom that we want as an investor, to invest in real estate without being an active investor as well. So with that, we've seen, if you would, John, let's touch on the current markets, since the pandemic, and we're still talking about this economy that we're in right now. We're in this kind of a pandemic economy heading into a recession. But there's a whole lot of folks that have come through this, that have unfortunately have lost their jobs. They're in a different situation with regards to employment, and now they have possession of their 401k, and now they can convert that over to a self-directed IRA or a real estate 401k. Give us a sense of what that's been like for the past several months since we began this on your end. I can only imagine you've been fairly busy.
Yeah, absolutely. So it's interesting as we look at the financial markets, so stocks, bonds, mutual funds, and the direction that those particular asset classes have taken in
Mhm.
relation to real estate and other alternative investments. And so what we have found over the course of the last 6 months to the last year is that investors, yes, being displaced from their careers or their current occupation. And what you'll find is when you leave a company or you're let go, that 401k or 403b or thrift savings plan or other employer sponsored plan that is granted to you, you have the ability to be able to roll that over into an IRA and then at that point take more control. It's no surprise that if you have a 401k or a 403b or other employer sponsored plan, you're not going to be able to self-direct into real estate or self-storage or other commercial real estate investment opportunities. You're limited to only a basket of mutual fund selections. And so this opens up the opportunity for investors, and we've seen this opportunity open up for a lot of folks to be able to finally gain access to their employer sponsored plans because they have that career changing event. Beyond that, as far as the real estate marketplace and investors utilizing their self-directed IRAs, we really haven't missed a beat, so to speak, or seen investors miss a beat. I will say that there are probably less investors that are brand new to real estate that are entering the marketplace. I think a lot of people, from my perspective, and a lot of the folks that I speak to that are brand new to real estate investing, they're very concerned about the eviction moratoriums. They're concerned about what is the future of the real estate investment marketplace. Some of these folks are riding the proverbial financial wave that we've experienced, where their portfolios of stocks and mutual funds have maybe performed rather well. So they're not really ready to fully jump into taking that leap of faith and buying their first property or investing in their first syndication. And that's okay. There's nothing wrong with that because there's this whole universe of incredibly active real estate investors that are looking at the changing markets and the dynamics of the markets. And they're saying, okay, now's never been a better time to get involved in real estate using my self-directed IRA, 401k, or other retirement account that's been sitting on the sidelines, not really doing much for me. So obviously this changes, and there's the cyclical nature of our business and the financial markets as a whole. Back in 2009 and 2010, I saw a large exodus of individuals coming from the traditional markets to the alternative investment markets, to the private markets, and they were brand new. Well, when we looked at real estate inventory at that time, it was a great opportunity. It was in a perfect storm for individuals to get involved in real estate investing and use their self-directed IRAs to do so. Will that happen again? It may or may not. Obviously, I can't prognosticate whether that will come to fruition or not. But if real estate inventory begins to increase and investors feel trepidations within the financial markets, then we will certainly see another tidal wave of brand new investors that enter the marketplace. But I always challenge those that are already active in real estate, or even if they've done their first deal, to really look at their retirement portfolio objectively and determine, can they do better in real estate or would they do better in the traditional financial markets? Most investors that I come across feel strongly that they will do better in real estate compared to the traditional financial markets. They feel they have more control in real estate compared to the traditional financial markets. And that's why, generally speaking, they make that decision to self-direct an IRA, 401k, or other retirement account.
And I think that, and there's multiple reasons behind that as well. And so, John, in the time that we have here, most of our folks are fairly savvy with regards to self-directed IRAs and, what they are and how you can use them. And if not, then they can go to your website, and we'll give that URL in a minute here and pull down the free information that you have. And if they want to dig in even further, then, we're going to do a class together on that. But what I wanted to do on this podcast is I wanted to get into maybe some of the 201 level type questions, if you will. So, we follow a lot of economists, and, we're always looking forward to when is the best time to purchase an existing facility or multiple, and when is the best strategy to focus, or when is the best time to focus on our development strategy, and how do we time the markets, best that we can. And so we keep our ear to the ground. There's a number of economists that we follow as well. One of them being John Bowens. He's probably the godfather of all data with regards to real estate. And, his everything coming out of his camp, everything he's been writing for the past year before pandemic or otherwise has been, as we head into the recession, we know that people do flock to real estate, but he has really been beating that drum, feeling that the financial markets in general are just, way too frothy, and that now the returns from institutional investors as well as individuals are rushing to, or should be rushing to, real estate. Case in point for our, because it's an asset, it's a hard asset that produces income. And basically at the end of the day, hard assets that produce income, and that, for the most part, that's real estate, because it appreciates and you can depreciate it and borrow money to buy it, that it matches, and it's, it is, as you mentioned, the perfect storm for that. But that being said, we're seeing in self-storage, absolutely love our space, obviously, because it does well during a recession. And so we've been waiting for this time. And we're seeing that, Blackstone just invested 1.6 billion into self-storage. We're seeing Bill Gates has just put quite a bit of a very large investment, along with Warren Buffett, into self-storage this year. And so now all eyeballs are on self-storage. And so I guess I'd ask a couple of questions. We know we're in a good time right now for self-storage. We're in a great time for real estate. All indications are pointing towards that. But I want to speak to the CARES Act and, the ability to take more money out, and maybe the risks of that. We've been hesitant in promoting that to our folks, just because we're a little unclear, and we certainly don't want to persuade folks to do that, because it does have to be paid back. So I'd like your take on that, first of all. And then second of all, for alternative investments, we think of alternative as, real estate is about as simple as it gets. Alternative is stocks and bonds, and investing in somebody's company and stock who you've never met before and who's going to make decisions without consulting you. But tell us then, I want to touch on the CARES Act, but then also other alternative investments that maybe you see have become popular, or that people are turning to as well, either during the pandemic or as we head into the next recession.
Yeah, so great question, Scott, as far as the CARES Act is concerned. Now, that ship for the most part has sailed in terms of how IRAs fit into the fold as of December 31 of 2020. So Section 2202 of the CARES Act outlined what's called the coronavirus related distribution. And what the coronavirus related distribution said is that one could distribute from a retirement account, which could be an IRA, could be a 401k, 403b, so on and so forth. Just think any retirement account. You could distribute up to $100,000, can't exceed 100,000. So up to $100,000 you could distribute. And so as long as you return that money within 3 years from the date that you took the distribution, there would be no taxes or penalties. Now, if you failed to return that money to a qualified IRA or other retirement plan, then you'd have to pay taxes based on the amount you distributed spread out over 3 years. So there'd be a pro rata calculation that goes into play there. Now, if you didn't take a distribution in 2020, you really don't have to worry about this. Could there be an extension? Of course, anything can happen with future legislation or a future relief bill that is passed in the House and Senate. But as of right now, that ship has sailed. What I will mention is for those that maybe did take that distribution, that coronavirus related distribution, again, you got to make sure that you put the money back within 3 years. And you also would have had to have qualified for the coronavirus related distribution. And there's 3 qualifications for that. It's not that anybody could take out that distribution. Now, what I'll say very emphatically and passionately is our goal as investors, and I'll put my investor cap on. So not only do I work for Equity Trust Company and represent Equity Trust, and we've been in business for over 40 years, and we have over $28.7 billion in assets under custody administration. And, we can lay out all those facts and all those data points. I beyond Equity Trust, I'm also an investor. And so I always put my investor cap on, and I always look at, if I take money out of my retirement account, I have now removed it from the tax privileged environment that it existed in. In an IRA or a 401k, even a Roth IRA, we could talk more specifically about, which one could argue is even more powerful than a tax deferred IRA. With an IRA, as I'm buying and selling real estate, options, wholesale transactions, private lending, investing as an equity partner or debt partner in a real commercial real estate project like self-storage, whatever it is that I may be doing. So as long as I'm following all the rules and all the guidelines, I am privileged to the tax exempt nature of that account, which can be incredibly powerful. I like to call it, Scott, compounding interest in the absence of taxation, not just compounding interest, but compounding interest in the absence of taxation. That can ultimately allow me to get to my financial goals in a shorter period of time, because I'm eliminating that variable of taxation, whether it's short-term capital gains tax, long-term capital gains tax, or ordinary income taxes. And so I don't want to take that money out of the retirement plan. I want to keep it in the retirement account. And I want to go forward and make intelligent, objective real estate investments with those retirement dollars, because of the ability to create tax-free profits going forward. As a for instance or example, I have a double in my self-directed Roth and traditional. I actually bought a double partnering my traditional and Roth IRA together. And I bought it last March, and I'm commanding a $750 gross rent per unit. So I got $1,500 in gross coming in. Net operating income on a monthly basis is anywhere between $1,100 to $1,200. Cash on cash return is between 15 to 16%. And that's flowing into my respective Roth and traditional account. Now, that property also has the opportunity for appreciation. Now, with that appreciation, I have no long-term capital gains tax, and I have no recapture depreciation should I sell the property. And that's my exit strategy. My wife and I intend on selling the property in about 5 years from now. We've already done quite a bit of work to the property, so it's already increased in value. In 5 years, after we've enjoyed 15 to 16% cash on cash return pro forma, we're looking to sell the property and make between $20,000 to $25,000 in profit. Again, that's all tax exempt in the self-directed IRA and self-directed Roth IRA. So the goal again is to really try to keep the capital in the retirement plan and preserve the capital in the retirement plan, because it allows us to create future compounding interest in the absence of taxation.
Mhm. And that's really what I was looking for. Is I know that ship has sailed, but there's still a lot of scuttlebutt about whether that was the right decision. And I know we didn't want to belabor that too much, but I agree with the position that you have, and we just didn't promote it too much because there was still a little bit of an unknown, and we certainly don't want to be responsible for somebody taking that out, borrowing against it, and not knowing their capacity or ability to budget and foresee that they do need to pay that back. So that's the first question. And then the second one is let's talk about all other alternative investments that you're seeing that folks are maybe moving towards, or that are gaining in popularity as we head into 2021.
Yeah, so Scott, beyond real estate investing, rentals, flips, wholesaling, private lending, trust deeds, mortgage notes, performing, non-performing notes, all of those types of real estate assets, we are a custodian of, and we've been doing it for over 40 years, and that's really been our core competency. But all along the way, because we've been known as a unique alternative asset custodian for retirement plans, we've attracted very contrarian type thinkers, and we've attracted people that are looking to invest in very unique alternative assets. And so we have developed systems and technology along the way to accommodate these unique alternative assets. Now, I'll just name a few. So one, because it's wildly popular at this moment in time. And when I say wildly popular, let me disclaim, Scott, that that's not an endorsement for this particular asset class, but I can say that it's become very popular, and that's cryptocurrency investing. So think Bitcoin, Ethereum Classic. Well, right now, our platform supports about 9 different coins, and more may be added at a future date. So if someone wanted to participate in diversifying a portion or all of their portfolio into cryptocurrency, digital currencies, they have the capability of doing that through equity trust. Another asset class would be precious metals. So think gold and silver. And so one can go to a dealer that sells gold and silver. They can use their self-directed IRA money, buy the physical metals. The physical metals go to a depository for safekeeping, not held with equity trust or with the client themselves. And then when they sell those precious metals, let's assume they sell it for a profit. That profit goes back into their self-directed IRA and of course is exempt from taxation. So no short-term or long-term capital gains tax like we've been talking about, the core benefit of using a self-directed IRA, Roth, solo 401k, other tax advantage investment account. Another thing that I should mention in terms of alternative asset classes, and I mentioned the public markets versus the private markets. So we know that the private markets have surpassed the public markets just recently. And so when I say private markets, what I'm talking about is private company investments. Let me give you an example. I'll give you a real estate example and a non-real estate example. So real estate example, self-storage. We have a number of clients that have used their self-directed IRAs or self-directed solo 401ks, even better in many instances. And we can talk about that further, Scott, is why one might consider a self-directed solo 401k over an IRA for storage facility investments. That's kind of 301, 401 topic. But we find investors invest in storage equity partnership storage facilities with their self-directed IRAs or solo 401ks. Beyond real estate, to give you another example, I had a client, this was quite a few years ago now. He was a doctor and retired. And in fact, he was a surgeon. And he identified a private company that was developing surgical devices. And the goal was they were going to get a patent and build a proof of concept and then sell that company to a much larger manufacturer, like a Medtronics, for example. And so that's exactly what they did. He used his Roth IRA, invested about $20,000. 3 years later, the company sold. He got his principal plus the capital and the capital return. And so he made a significant profit in his Roth IRA tax-free. And then he just rinsed, repeated, reloaded, reinvested, took his Roth IRA money and invested into the next privately held company. So you can also look at investing in private stock, LLCs, limited partnerships, and other entities with the self-directed IRA, 401k, or other investment account.
And that's exact. I think we're going to save the 301 and the 401, perhaps for our class or maybe for podcast number 2. But that's exactly what that I was looking for is a little bit about the ways to be able to invest and what people are looking at. And obviously, crypto is very big. I have my hand in crypto just a little bit, maybe dipping a toe in, but still. At the end of the day, I'm with John Burns and the others out there. I like a hard asset that produces an income that I can see, touch, and feel at the end of the day. So, John, let's talk about then 2021. Not necessarily because I know you don't advise people on investments, but what do you see in the economy, perhaps the financial markets in general, and the investment markets? Not with relation to what people should be or could be investing in, but what do you see in terms of a turmoil or a settling in or other sectors that are going to be affected as you have your hand in a lot of different areas, investing yourself, and a lot of you're seeing a lot of folks that are making moves right now, and listening to what the financial markets are saying. What should we be looking for? What are some of the triggers and maybe some of the surprises of 2021 that we need to be on the lookout for?
Yeah, absolutely, Scott. It's a great question. It's a question we ponder frequently here at Equity Trust Company, not because we give advice or recommendation, but rather because we're trying to provide support, services, technology, infrastructure, training to our personnel to determine where's the demand going to be. Is the demand going to be in cryptocurrency? Is the demand going to be in traditional stocks, bonds, and mutual funds? And these are all asset classes that our customers participate in. Because one of the unique aspects of our organization that a lot of people aren't aware of is, although most of our conversations and most of our education is around alternative asset investing, mainly real estate and cryptocurrency and precious metals, But we also have the ability and infrastructure and technology for investors to invest in traditional stocks, bonds, mutual funds, ETFs, so on and so forth. So really they can diversify under one umbrella, under one company, in both traditional and non-traditional investments. And so to answer the question as far as is what I'm seeing and what we are seeing, obviously the data tells us and leads us to that the private markets have surpassed the public markets. And with the Jobs Act, even though it was way back in 2013, let's face it, that feels like it was just yesterday in the financial services industry. And so with crowdfunding, online crowdfunding, with a lot of information and education that's now being disseminated online around private asset investing, it is much easier for the everyday investor, I'll say, to get their hands on and get access to alternative investments. Whereas pre 2015, I'll say, it was much, much more difficult. And still to this day, there are challenges with investing in certain private assets. For example, if you're not an accredited investor, you may not be able to invest in certain types of assets or certain types of platforms. But there are other platforms and other avenues where even investors who are not considered accredited investors can participate. And there's so much education and information out there for individuals to be able to gain access to and start to determine how they can self-direct their own portfolio. And that leads me to this whole concept of being able to self-direct your own retirement account. You see a lot of mobile apps now in companies. One example, not that I endorse this company or have any affiliation, but Robinhood, right? Where you can open an account, you have a mobile device, you have a mobile app, you put money in, you load money in. In cryptocurrency, it could be Coinbase, for example. You load money in and you're self-directing. And so this whole ability to be able to self-direct into alternative assets and traditional investments is certainly becoming more mainstream. And so we're by no surprise seeing a large influx of people that are now raising their hand and saying, hey, I want to invest in alternative assets, but I'm really not sure how to do that. And so the goal going forward is how do companies like Equity Trust and other entities and companies in our industry and adjacent to our industry build the infrastructure and the foundation to be able to connect investors with investment opportunities. Because as you know, as a self-directed IRA custodian, we can't play matchmaker. We can't connect a investor with an investment sponsor, but how is the industry going to be molded going forward? And I think undoubtedly we're going to see more infrastructure, more support, more companies, more money put into that marketplace, which means there's going to be more opportunities for investors. So, I encourage folks to, make sure that they plug themselves into organizations like Equity Trust, organizations like your organization, Scott, because that ultimately can give them some direction and guidance on what's going to happen in the future. It's with no doubt in my mind that the private markets will continue to thrive in comparison to the public markets. That said, it doesn't mean don't invest in public assets. It's just important to understand that for the first time, the private markets have surpassed the public markets, and there's got to be a good reason for that.
Mm-hmm. Mm-hmm. Understood, and appreciate that, John. And as we wrap up, I appreciate your time and looking forward to continuing this conversation and really teaching more as we have this upcoming workshop. And so, before we end for the day, would you please give information on how people could find you, learn a little bit more about, for those that are even new to self-directed IRAs, how they can begin to put their money to work and self-directing their own retirement?
Yeah, absolutely. Best place to go. Our website has a lot of information, education, training, www.trustetc.com. So it looks like trustecc.com.
Mm-hmm.
You could also go to YouTube. I encourage a lot of folks to go to our e-learning channel on YouTube, I call it. Just search Equity Trust Company on
Mm-hmm.
YouTube. We have, and I've created hundreds of videos on a variety of different topics, from real estate to cryptocurrency to precious metals. So that can be a great way to get more training. We also, if you subscribe to our newsletter and go on our website and plug in your email address, you'll get access to our upcoming webinars and other courses that we have on a continual basis. So folks can check that out as well and get more education. And of course, reach out. We have agents that will talk folks through their specific situation, what they're looking to invest in, and how that can work with a self-directed IRA.
I appreciate that, John. And folks, please take John up on that and go visit their website. They have been doing this a number of years. They have an expansive library of free information to educate yourselves, not only on the process, but also on things to consider. Again, not suggestions and recommendations on where to invest, but how to go about investing in these alternative asset classes and how you can take control of your retirement. So with that, John, the last thing we have for today is what is a parting success quote that you would like to share with everyone listening?
Parting success quote. Wow, that's a good one. So I'd have to say, right now, as a landlord myself, as a real estate investor myself, I'm talking to tenants every day. I'm having conversations with other real estate investors every day. And so, I try to exhibit and demonstrate right now, particularly with the pandemic and everything going on, a high level and high degree of integrity and empathy and sympathy for folks' situation. If I'm talking to a seller that's in a difficult situation, especially right now, I need to show an incredible amount of empathy and sympathy. If I'm talking to a tenant that might be having trouble paying rent, I need to show an incredible amount of empathy and sympathy. That doesn't mean that I tell them that they don't have to pay their rent, but I'm going to show sympathy and empathy. And so, I'll say the parting quote, which I believe is by Maya Angelou, is it's not always what you say, but it's how you say it. So I'll leave people on that note. It's not always what you say, it's how you say it.
And timely for so many reasons, John, and that is a quote for several years because I think we've become a generation. Whereas how many messages are lost in translation because we're using electronic means to communicate, whether it be through texting or email, and messages are misconstrued because of how it is taken on the other end. And so pick up the phone, talk to folks, and at the same time, use some empathy, sympathy, and for Pete's sakes, be tender. You can deliver bad news in a tender way. There's a lot of folks that are scared and hurting right now. And so I agree 1,000%. Well, John, once again, thanks so much for your time. Looking forward to our upcoming class. You can find out more information on both of our websites regarding that. So keep an eye out for that. And so with that, gang, we will wrap it up. Say thank you once again, John. And for the rest of you, we will see you on the flip side.
Thank you.
Ladies and gentlemen, thank you for listening as always. Now, we're going to be talking about topics like this that are on target for the times that we find ourselves in. So it is important that you are listening to this podcast every single week because the guests that I'm going to be bringing on and the topics we will be covering are relevant to what we are all going through right now. And it's just going to get better and better and better in terms of the content that we're going to be discussing, and it's going to be more timely than ever. So please, make sure you subscribe to the show and make sure you're paying attention to these episodes as they are coming out during this period, as I am specifically going out and finding guests who are providing really valuable information you need right now. So thank you so much. We'll see you next week.